Hello there, guys. Welcome back. Karibuni sana to this channel, of course, where we do what uh, we love doing. uh, in this channel, we do what we love doing, and whatever we love doing is trading, looking at these charts, analyzing these charts, and making money from these charts. So, welcome back again today. It's a new week. It's on a Monday. As you know, I don't usually trade on Monday, so I'll be um looking at the charts, trying to see what we're expecting throughout this week from tomorrow on Tuesday, um yeah, onwards until this Friday. So I want to look for buyers and look for key levels in, yeah, so that we may have an overview of what this week got for us. Okay, so as you can see from our screen there, whatever we have is the monthly time frame, and guess you can see it clearly there, and I want to start from this time frame. So what can you see for those guys who trade ICT? Because I'm an ICT trader, so you can pause the video so that you might have an overview of what are you seeing, and from here what are you anticipating, so that I will be also telling whatever I'm seeing, right? So you can pause it, then let's get cracking. So from this level, as you can see here, sorry for this, I just tapped into these. As you can see, we have these bearish price leg onto this level, yeah, from this top, this swing top, and this swing lows bottom, the low. So these are price leg. We can see the market rallied higher, okay, creating a market structure shift here, whereby this candle closed above these. Okay, it left a fair value gap here between this candle's high and this candle's low. We can see a fair value gap there, and also, yeah, so I'll start with that fair value gap, and it will be an important fair value gap, whereby, let me draw these lines. Yeah, and the low, and that's the low. So, want to put it at the low, yeah, that is the fair value gaps high. And over here you have the fair value gap, the monthly fair value gap low. And what else can you see over here? We had this monthly fair value gap. We can see how price reacted off that zone in this monthly fair value gap there, and using my Fibonacci, because generally we want to see price keep pushing lower, okay, and to these lows here to clear these lows, yeah, and to this fair value gap here. So generally, for, by the way, these are DXY, dollar index time frame, which is inversely opposite to Euro USD, or the foreign currencies, not yeah, the currencies paired with dollar. So whatever you're going to see here will be the opposite in GU and also in EU and those other pairs. Okay, so we are anticipating lower prices, okay, but price showed signs of a retracement. Okay, immediately it made this low, we saw this retracement, and to which point to this level, the monthly fair value gap is the level that it has it had drawn to. And we, as we know, we sell when we are in premium, when prices are expensive, and also we buy in discount when prices are cheaper. So to determine the discount and the premium level of this bearish price leg, we have this high and this low. Okay, this low over here. So you can see this red line of mine here, these represents the 50, the equilibrium point. Okay, when whereby prices are not that much expensive and that not that cheap. So at b or at balance, yeah, we have no there is no expensive nor price. The price is average, so you can see there. And whatever is above is at around this zone we have that monthly fair value gap. So it was a key uh, level of us, but we were expecting to see market retrace onto the constant encouragement, but that didn't happen. What we has happened is using the high of the fib and the higher and the low of that monthly fair value gap. You can see the candles closed at the 0.25 level, their quarter level. You can see how the candles closed around that zone, but the candles the wicks did the damage. This week over here it dipped into above but never tapped into the monthly fair value gap. And to some extent, when prices leaves a gap open, it's a clear sign that we might be pushing lower. Okay, we might be pushing lower. It's a clear sign that it's a strong bearish move. When we are bearish, we don't expect, we want to see some gap left open, maybe market trace to the constant encroachment of this monthly fair value gap and also leaves a gap open there. Then it's a huge confirmation that we are heading lower. So the market tapped into this fair value gap, this monthly fair value gap. You can see it created a swing high. Then we have this fair value gap over here, and also whatever is spotted is this breaker. We have the low, the high, and the lower low. Okay, market has also retraced into this breaker. Okay, and also we had this order block, these two down close candles that produce these bullish price rank. So we have seen prices tapped into these order block that is paired with the breaker. Okay, so on the monthly time frame, whatever I want to see, I want to see how this candle that has 10 days remaining, 10 days and 3 hours remaining before it closes, I want to see how it will close. If it closes outside these fair value gap here, these candles high and these candles low, then I'll be bearish for the other month. Okay, if it closes below these monthly fair value gap, that will also act as an inversion fair value gap. Okay, so I'll make it unique. Because it will be here, I want to make it like purple. Can we spot purple or green? I think greenish is better. Yeah, that green represents the monthly fair value gap. If the candle closes above the constant encroachment, then I'm expecting to see these liquidities here being engaged, this swing high liquidity, then market retrace into the constant encroachment of this monthly fair value gap. Then later we might push lower, but we want to see the reaction that will be around this zone. So back to the monthly, to the weekly, I mean, want to read how, want to see how price will is playing out. So what we can see here, price retraced into this monthly fair value gap over here. We saw this week dip into premium, then we had these bodies closing around this zone, creating a buy side liquidity above here. I guess you can spot these highs, draw them. Yeah, those highs. Spot them how this buy side liquidity above this high was cleared by this candle, then rallied down. We had this bullish candle that now will act as a bearish order block. Yeah, we have this order block. Like is that, and also these other order block. To me, these are conferences that we might be heading lower. Yeah, I will delete these. Yeah, so remember, this is the monthly fair value gap low. So I will label it. Let me label it so that you might not confuse, because monthly FEG low, it should be at the middle but at the right. Yeah, with the green. So yeah, I guess that's clear. I like it. I like things to be. Let me put it below and to see, yeah, the bottom. Yeah, that's now okay. Yeah, over there. So around us, so we can see these bearish moves. We have these order blocks being created there, and these last week closed really bearish, a heavy bearish candle you can see in them. And using this price leg, because we don't buy when we are in premium, okay, we want to buy when we are in discount. Okay, so we'll be watching how price because I used my favorite tool, the Fibonacci tool, that from the low to the high, that, yeah, we can see the 50 level is paired. There's a green, this 0.5 rather than there's a green candle there, so it represents, let me make it more clear. So it represents the, yeah, that one, it represents the 50% of this price leg, this bullish price leg from this low to this high. So I want to see price coming to this zone, and from this zone how will this react. So around here we can be sure, we can conclude, or we can read price whether it is bullish to this level, to this buy side liquidity here, or it will come lower and clear these sell side liquidities resting below there. So yeah, so on the weekly time frame, what we can see is these bearish arrays. These order block, these two order blocks there. We have these huge down close candle. Okay. And we want also to see how it will react in this discount level, if it will give us opportunities to buy or otherwise. So from the weekly, whatever we can see is we have this buy side liquidity below this 50 level. That is my draw of liquidity. This sell side liquidity label there, I guess you can see sell side liquidity. So this is my draw on liquidity for this week. And yeah, from here, I guess if we go to the lower time frame, we can see what we can anticipate to see. Okay, so I was watching these price. Remember these two green. Let me make this. Let me make another color. You can have a light purple. Yeah, this green. Yeah, over there to differentiate it between the weekly, these monthly fair value gaps over there. Over there. So to differentiate this thing. Yeah. So whatever you can also see in the daily, remember we have the day, whereby your analysis, if you start from the monthly, then you can drop down to the daily. From the daily, you can go to the 1 hour. From the 1 hour, that's where you can draw your market maker X model. If it's buy, then entry will be around in the 15 minutes time frame. So come from the monthly, go to the daily, 1 hour, 1 hour, 15 minutes for entry. So yeah, so that's what we'll do. So here around the zone, what we can see, we had these, after these liquidities were taken, and also price had retraced into discount, into premium, I mean, inside these monthly fair value gap, whereby we had seen candles close around the first quarter of this monthly fair value gap. We had seen that in the monthly time frame. So here we had this consolidation here, then price rallied higher, clearing these equal highs, or this buy side liquidity that was here. Then we had this huge drop down that created a market structure shift over here. Then a fair value gap was created around this zone from these candles low and also these candles high. Okay, so we can see price retraced and fully filled these fair value gap. Then we had these down close candles here that again created a fair value gap within these candles low and these candles high that was tapped into it by this week. Then price is moving lower, and whatever I can see, I'd seen this inversion fair value gap here. Okay, yeah, inversion, I like it to be, yeah, we have that daily inversion fair value gap, whereby I wanted to see today's candle close below it, for as it will be used as resistance in maybe this the remaining part of the week. We'll be using this daily inversion fair value gap as resistance to go lower to this sell side liquidity over here. As you can see, the liquidity is resting below these levels. Yeah, so this wanted to see it. You can see how today, this was on Friday, today on Monday, price rallied higher, this manipulation, then this distribution lower inside this daily inversion fair value gap. It should be an FVG, not FF. FV. Holy shit. FVG. What's happening? Oh. FVG. Yeah. So yeah, today's the candle rallied didn't create we can see a fair value gap here. We can this fair value gap here. We'll watch whether it will be traded through. So it's a point of interest. We can't assume it. Yeah, have that daily fair value gap also inside this daily inversion fair value gap from these candles. Those who are not clear, we had a fair value gap here. This candle's high, this candle's low. There is no body there, so we have this fair value gap. But why do we call it an inversion fair value gap? It was a fair value gap because we had buy side delivery, but we lacked sell side delivery that was provided here. We had this movement and this sell side offered, meaning this imbalance here that lacked sell side delivery has been balanced by this sell side delivery provided there, meaning it is now balanced, but it will be used as a resistance, preventing higher prices onto our sell side liquidity. Okay, this outlined there. So on the daily, that's what I can see. Also these up close candles as an order block. So we have this bearish order flow with a clear market maker sell model, these lows being cleared here, this fair value gap being closed up, market rallying lower, creating a fair value gap being tapped into it. So you can see this curve over here heading lower. So dropping onto the 1 hour, what wanna see what really happened today. So this was on last week Tuesday. So now I want to watch onto Wednesday. We can see this price action here. Market wasn't that moving, it was moving sideways from Tuesday, Thursday. On Friday it rallied lower up to this level. That's why it closed on Friday. This huge move lower, then market opened on Sunday, traded lower until on Monday around 12 a.m. here. That's when the market opened. And let's see what happened on this Monday. So I want to place my vertical line showing where the market opened on Monday. So Sunday had traded lower and Friday closed there. We had this gap. We had closed here and opened here. We had this gap that doesn't have both buy side and also sell side delivery. So but market opened here, rallied higher, tapped into this fair value gap here, then these huge down close candles on Sunday, leaving behind a fair value gap. These candles low and these candles high. There is no body or wick, they don't overlap, so that these are fair value gap here. This gap, now we have sell side delivered. Market rallied on Monday, tapped into this fair value gap here. Then we can see it rallied lower around this 50 level of the monthly fair value gap, then retraced higher to, where did it retrace to? This candle's high is at 103.668 and this low 3.663. So we had no fair value gap here. But to this order block, we have this bull candle inside a bear market. So it retraced to this order block. Let's see whether it where the wick tapped into the constant, and we had that damage above this, above the 50 level, the constant at the mean threshold of this order block, I mean. Yeah, then the market rallied lower. As you can see, these candles, huge candle, again we had these higher candle, but bear market was in control. Our price came lower, cleared the liquidities around this zone, and this was in New York time, 9 a.m. I wasn't watching the markets today, so yeah, we can see this buy side liquidity being grabbed here. We had this order block, the market retraced into the mean threshold again, then rejected this zone sharply lower, came and cleared our sell side liquidity below here. Then bull candle rallied, cleared this, the high of this candle, then huge moves down. Then we have this retracement after a swing low had been formed. So yeah, and we are remaining with 2 hours for the day to close. So yeah, so that's what happened today. If we go to the 15 minutes whereby we do our entries, what we can see is let me go back to the 1 hour so that we may have these order block labeled here. As we can see, market are retraced into this order block, this fair value gap, I mean. So these are bearish order flow. This was a bearish order flow. We had that order block. If you go to the 15-minute time frame, we can see I trade New York time, so I'll mark 7 a.m. and see what happened today. Yeah, let me make it red. Yeah, the red line, you can see the blue line is when the market opened, and when the red line is the New York session. So I'll also label my Asian range from 8 p.m. 8 p.m. is around this. So take this high to 12 or to 2 a.m. Yeah, we have that range that represents the Asian range. So we can see what happened. The highs have not yet been cleared, the Asian highs. So we had these low here, market retraced again, took the liquidities, this Asian liquidity, then market retraced into this 1 hour order block. Let's see how the candles closed in that order block. So here we have the high and the low. Exactly. So we can see how also the candles respected the first quarter of this order block, but the wicks did the damage, tapped into the constant encroachment of the mean threshold of that order block, and then sharply dropped lower. Okay, yeah, so we had that sharp, but what happened? Market New York, around New York, we had this consolidation here. So market resisting the OB, clearing these buy side liquidities here, all these liquidities that had been from there were engaged by these move higher into the order block mean threshold. And then we have this drop down, creating a market structure shift around these lows here, clearing these lows and created a market structure shift. And also we have these candles low and also these candles high that created a fair value gap there. We can see our price rallied higher around 10 rallied into that how can I call it, fair value gap. Sorry, this fair value gap, I guess you can see it clearly. So the market rallied into this fair value gap, and let's use my tool to determine the constant encroachment of that, the lows and the high. Yeah, we can see how the candles respected the constant encroachment of that zone, whereby the candles were closing below the candles closed below the constant encroachment of the fair value gap, but the wicks did the damage. And what we can see here is whatever I was saying, if you are bearish, I would like to see some portion left open. So we had from this candles low to this candles high, we had that gap that has been left open. So it is also can be used as a confluence for lower prices. So it has been left open. So for lower prices, yeah, it's an indication for lower prices. Then market, after the candles had closed below this constant encroachment of this fair value gap, you can see these move lower. So my entry would have been here, below these, above these candles high, if because this is my entry model, it's around between 10 to 11, so it's the silver bullet. So it would have been here with my stop loss above this candle, this candle's high, and of course would have targeted a 1 to 2. Yeah, around that zone. And TB could have not been hit so far, but I will close also my trades at around 11 to 12. So at around 12, I'll close my trades at around 12. Yeah, here after this candle, so I could have closed my trade here, okay, because it's past 12. Okay, then we saw this retracement to our entry, you can see there. So if I could have closed it here, then this other portion could have let it be and wait for tomorrow. But since it's on a Monday, we don't trade Monday. But I see it was a clean day. It was a clean day over here. But something else, the Asian highs had not been cleared. So it could have been kind of challenging, because I could have anticipated to see the highs being cleared, then continue lower, but that didn't happen. So it's on Monday. So yeah, we've seen I could have closed my trade before at around 12 p.m. So it could have been a good a nice 1 to a nice 1 to 2 or a 1 to 1. Yeah, it could have been a nice 1 to 1 risk to reward ratio. Yeah, so that's how the market played today. The inverse is true for euro. I don't know whether we can go to euro. Let's really go back to euro USD. We do it faster. We see how these worked out. So around this zone, you can see also here, and the euro USD, we have these monthly fair value gap that has been not yet tapped into. Okay, we have this monthly fair value gap that hasn't yet been tapped to. So it's our draw on liquidity if euro will show signs to be bearish, while the DXY shows signs to be bullish. Okay, which I have said, if you want to see bullish prices or higher prices in DXY, want to see this candle close in the inside this above the constant encroachment of this fair value gap here, as you can remember the two green lines. Yeah, if you want to see higher prices. So in euro USD, the same. If I am bearish onto this monthly fair value gap there, I will also want to see this candle close inside this monthly fair value gap. Also use green, make it green. Yeah, these are the green. Yeah, I guess you can see that's the weekly, the monthly inversion fair value gap. And here, if you have these price leg from this low, you have this low to this high. We can see price has not yet retraced to discount. Okay, so where is our discount level? Above here. I'll use my horizontal ray. Yeah, there. So this is the monthly fib level, monthly 50 fib level, where prices are not expensive nor cheap. Yeah, we have not yet retraced into that zone. So in EU, it shows us that we should be expecting lower prices, because we cannot buy while we are in premium. Yeah, we buy when prices are cheaper and also sell when prices are expensive. So in EU, it shows us why we should be expecting lower prices compared to higher prices, meaning also in DXY or dollar, we should be expecting higher prices, okay, into this monthly fair value gap, as because EU Euro USD is showing us, is also, or is telling us that we have to see a retracement to discount for us to be in a buy model. So we want to see this monthly time frame, or this monthly candle closed inside this monthly fair value gap there, for us to continue with lower prices. Okay, yeah, so here I guess you can see we have these high, low, higher, high. We have this down close candle as an order block. Okay, this not order block, as a breaker, low, high, higher, high. We have this breaker here, this down close candle that is paired with these two bullish candles that is a bearish order block. And using my Fibonacci, I can see where whether price has tapped into the prices have tapped into the constant encroachment of this breaker. And one thing I know about breakers is immediately the candles leave the breaker, we usually have a sharp or a propulsive move towards the anticipated direction. So if prices will leave this breaker lower, we'll have a sharp displacement or huge heavy down close candles. Okay, yeah, so we can see here this candle has retraced into that breaker, and also the OB I have told you. So using these high and this low, we want to distinguish where is our equilibrium point, so that we want to sell, because as I've told you, generally we want to see a retracement lower. Using this price leg, this bearish price leg here, from this high to this low, we can distinguish the discount and the premium levels from which we want to sell. While inside premium, we want to sell towards this level. Okay, so if you can see, my 50 level is at around this zone that I've already labeled there as the monthly / weekly 50 level. Here you will see it there. So we have already retraced into premium, so we should be anticipating for sales. Okay, dropping down to the weekly, around this zone you can see the thing I was telling you, the 50, the monthly / weekly 50 level is there, because it's from this high, okay, from this high to this low, whereby we have also confirmed this market structure shift here. Price retraced to premium, and whatever you can see is this weekly buy side liquidity that is there. And also we can spot this weekly inversion fair value gap, this candles high, this candles low. This is the weekly inversion fair value gap. So from this point we can be looking for retracements lower, because already we are in premium levels. Okay, we have this market structure shift here, we have these liquidities resting below this low. So also will be our draw on liquidity, or general draw on liquidity, before prices retrace to this monthly fair value gap. So from the weekly we can see we are already in premium, with this buy side has also been engaged, and we want to see how prices will act off this weekly inversion fair value gap. Okay, so dropping to the daily, as I was saying, the opposite is true. The inversion is true to DXY. So in DXY, let's see whether the lows had been cleared. Or these the lows. 31st Thursday for EU. Yeah, the Thursday. We have this high. 30th Wednesday. 30th Wednesday. Yeah, we can see the lows in DXY have not yet been taken out, but EU has cleared the buy side. So DXY will have to retrace into this sell side liquidity, because it is below the 50 level, whereas in EU we have already tapped into premium levels. We have also shortly engaged these buy side liquidity here. We have engaged them here, but not that fully. We want also to see, I would like to see higher prices into these, as also the XY retraces to the sell side liquidity, and maybe engage these above here. Then we can expect a retracement lower. And here what I spotted is we had a small fair value gap. We have these candles low here, and this candles high. We have that fair value gap. It will be also retraced to. So for tomorrow, or for tomorrow, this is my drawn liquidity daily fair value gap after prices left this order block here. So tomorrow also I'm bullish. Might we have this fair value gap. Yeah, these candles high, like using black. Yeah, and these candles low. Yeah, so we have that small fair value gap. So we'll want to see how price reacts. If it will trade lower, then the rest of the week we will rally up. We'll see that play out. So yeah, going to the 1 hour, because from the daily we dropped to the 1 hour, and I want to see how prices played out today. Okay, so for Sunday, on Monday, yeah, today on Monday, we can see price opened we have these fair value gap here, and these don't close candles in a bull market. We have this order block candle, these candles retraced into this fair value gap here, and let's see how the candles were to these. You can see the candles respecting the closing at the upper quadrant, but the wicks doing the damage tapped into the constant encroachment of this fair value gap, then rallied higher. So making the chart kind of clear. Let me get rid of these. Yeah, so market dipped lower, then rallied higher to clear these buy side liquidities over there. Then we have these retracement lower, to which level also these don't close candles. The opposite is true for DXY. So using my Fibonacci tool above there and here, you can see how these also, the candles respecting the upper quadrant, they were closing inside that quadrant, but these candles did the damage, tapped into the constant encroachment of this order block. Again, this candle opened, it rallied lower, cleared these sell side liquidities below here, also cleared, also tapped into this order block, constant encroachment, then rallied higher, cleared this buy side liquidity, and you can see this candle drop lower into this order block here. You can see this clearing, tapped into the order block, and then rallied higher, came and took our weekly buy side liquidity. Then we have this range there, dropping into the 15 minutes. If you were to be watching prices, yeah, we have these drop lower into that order block, then rally up, creating a fair value gap. This an entry fair value gap at around 9:30. Yeah, this also the one I was telling you for entry. So we can see how the bodies are respecting the constant encroachment, closing around the constant encroachment, but the wicks doing the damage. Yeah, that could have been my entry at this low here. We have a small drawdown, then this rally up. We also had this order block here. That's why the market rallied lower, tapping into them, then rallied higher. And also this sign of an open gap that has been left open. Yeah, these are also a clear sign that we are bullish. So if we see this gap let open, it's a clear confluence that we might be rallying higher. So in the 30 minutes, what you can see is we had this huge, remember this is the zone of the 1 hour order block. Okay, we can also this order block here, price glided, clear the sell side liquidity, then candles came lower, respecting the main threshold of this order block. Candles were closing above the main threshold, then rallied higher, then came lower to clear the sell side liquidities over here. Closed in this 30 minutes order block, then we had this rally up. So it's also good to look at these time frames. You go through all. It's not necessary that you be looking at this fixed 50 80 daily. You drop to the 1 hour, then the 15. It's good for you to also compare other time frames. So yeah, as you can remember, this is the order block here I was talking about. We had this swing low, the price came and cleared it, then rallied higher. So one thing I like for my entries, it should be around, I'll not be trading. I realize something. If I trade my first during the first session around 7, yeah, as we can see, the first hours are not really in move, because mostly we have that consolidation around this zone. You can see we had this consolidation, then we had this manipulation to clear these sell side liquidities that were below here. Okay, then we had this market structure shift with the displacement, of course, leaving a fair value gap at around our key level between 8 to 9, 9 to 10, our New York Kill zone. Then we had our draw on liquidity, that was the buy side liquidity there. So entry at around this zone. If we were to sharpen my entries around that zone with a 1 to 2, with my stops being below that candle and targeting the liquidity or 1 to 2, yeah, it could have been a hit, yeah, and it would be a good day, a green day for us. Only a single trade, but yeah, Mondays we don't trade, but that's been my that's been how I trade and how I do read prices. So guys, thank you for being here. These are read prices. Please like the video, subscribe to the channel so that we may learn together. Wherever you see something, please tell me so that we get to interact and create a community, guys. So thank you for being here. Thank you for being in this video. Until next time, be safe, guys. It's been a long video, but thank you for being here. So until next time, be safe. Bye bye.